Today, we're talking about something electric. And it's important for investors to pay attention to the utilities sector, even though historically it's been a somewhat boring sector of the economy. Typically, more of your dividend plays, just companies that are slow and stable. But with the onslaught of EVs, more internet connected technology, and especially now that we're talking about AI and data centers and the need for electricity that drives, I think that the utility sector and broader power grid within the US and global economy is really exciting right now.
You're right, Victor. The electricity grid has been under refreshed scrutiny that it hasn't seen in ages, primarily due to that data center demand you mentioned, but also all those other factors are coming into play. We're expecting data center demand to double by 2026, their power usage, as well as just electricity usage in general to grow 38% by 2040, which is incredible if you sit back and think about something that traditionally grows, 1% or 2% a year. It kind of grows with population, not a whole lot beyond that. And so most of these utility companies are kind of stuck in this slow expansion without any huge investments going on. But this new source of demand through AI and data centers is really pushing a lot of investment towards them right now.
Yeah, I think it's really interesting because traditionally your growth vectors for the global power grid, global energy demand have really been your emerging market countries. Think those with growing population. China, especially India right now, is a huge contributor to global energy demand and further consumption. But now that you've got the onslaught of these data centers being built out, I mean, they require huge amounts of energy and huge energy infrastructure. And so it's really putting this kind of new stress on the power grid because, to your point, I mean, historically, you had utility companies are just preparing for, your modest population growth within your country like the United States. There wasn't really a new force besides, of course, now that we are getting some EVs and technology has been proliferating, but data centers are kind of kicking that into new gear. And I think it's fascinating because data centers now are having to work with utility companies, not months in advance, but years in advance for that power infrastructure. And so unless they're on top of it, making sure that these utility companies are working to procure what they need for power, then they're just not going to have it. And there's no way that you can run a data center with thousands of GPUs, thousands of miles of cable, all of this energy intensive HVAC units, things that are going to demand high amounts of power without working with those utility companies up front. So I think this is a really interesting piece of the conversation today. And I'm excited to kind of walk through some of the critical components all the way starting, I guess, first, with that power generation component. And so what we typically have, I mean, if you think about the US power grid as it stands today, of course, fossil fuels are a huge portion of that, natural gas being the primary contributor to electric output. But then, of course, you've also got solar, wind, as we have this push for these zero carbon or carbon neutral sources of electricity. But I think thinking about these inputs is kind of the first step that we want to take as far as where we want to go when thinking about the power grid.
Yeah, exactly. That's a huge question right now, is where is this coming from? Because so many of these electricity projects, like generation projects, take so long to develop, and we have demand for electricity right now. They are building data centers a lot faster than they're building power plants. And then again, that leads us into the other point that you raised of where, what method are we using to generate this? People don't want to just invest new money into coal, into oil. Natural gas is kind of seeing a lot of that short-term demand because that's something you can get off the ground quickly and is actually relatively, as far as fossil fuels go, pretty clean. But that kind of leads us into further options of, if natural gas can fulfill our needs right now, then what do we look at 10 years out, 15 years out to really meet the future demand that this is all going to drive? I think part of that we can explore solar panels and wind, your traditional stuff. But right now they're facing some issues on these data centers require 24/7, 365 power. No off days, no shortages, outages, because the programs and the types of tasks that they're running are just not designed to be stopped. But also there's so much money that goes into all of this that every minute of outage is costing them absurd amounts of money that they don't want to plan for, don't want to stomach that.
Right. You don't want your AI, your phone, your voice assistant, even just your Google search to go down for more than a minute a day. And so when you're talking about millions of dollars that are hedged on every single minute of these things operating, then you want to make sure you have constant uptime. And so I think that's really important. And I think it's interesting, the natural gas piece, because that, like you said, is easy to ramp. Right now it's cheap, so it kind of incentivizes continued use of natural gas. I think as far as the long-term grid build out, obviously it's very infrastructure intensive, but wind and solar has been a big piece of that conversation. But as we've kind of talked about before, the big issue with wind and solar is that the sun is not always shining, the wind is not always blowing, but these data centers are always operating. So the other piece that you have to have in complement to that wind and solar is large scale batteries in order to hold that electricity for larger periods of time. Now, I think the good thing is battery technology is starting to get there to where you have these large scale capabilities. I mean, obviously EVs wouldn't be possible if you didn't have batteries capable of holding a charge, worthy of a short road trip. But now that you've got these commercial applications, I think the battery technology is becoming more and more important, and it's starting to get there. I'd say that it still needs to advance to some degree in order for it to be super reliable for something like a data center, because the way that they're set up right now is they're pulling power from the electric grid. And of course they're relying on that combination of natural gas, of wind, solar, but they also have backup power generation that is going to be, via a natural gas pipeline or via trucks that are shipping, some kind of diesel to these facilities. So they always have to have that backup power in case the grid happens to go down. But I think, what I'd like to talk about are some other interesting things that we could be looking at for power generation that, some other countries are doing right now and is not necessarily so common in the United States. And a big piece of that is nuclear power.
Exactly. And there's been a really renewed push in recent years to get nuclear kind of back up to operating. Because in the 70s, 80s, there was a huge nuclear economy and lots of plants being built. The U.S. still has the most nuclear plants operating, the most nuclear output of any country in the world. But out of the 64 nuclear plants that are currently being built worldwide, 0 of them are in the U.S. We did just complete a couple in the past couple of years, but those are more anomalies than anything we're really seeing right now. Given this renewed push towards nuclear, it's being designated as green energy by more and more people. It's, there's a lot of attention and a lot of dollars flowing towards it. In the US, a lot of that's research on fusion as opposed to the current fission reactors. But in countries like China, they're building over 30 nuclear plants right now, just under construction. All of that, is, I think, a great opportunity to have stable baseload power that things like data centers require going forward. That's not producing a lot of carbon, a lot of emissions into the atmosphere. Yes, there's still mining involved, and that's something we're going to get to in a minute. That is, with all of these power plants being built and this whole nuclear economy picking back up, there's a huge lead time in getting that uranium out of the ground, processed, because processing of uranium is about 2/3 of the expense that power plants face when procuring fuel, and into those reactors that, again, kind of like the data centers, kind of like the electricity needs, is being built now. Well, where's that uranium coming from?
Yeah, I completely agree. And I think that the mining issue is something that has to be paid attention to, because I know that you've been looking at uranium a lot recently, and the sources are not always in the best, geopolitical places. Of course, some of that has been some of that mining is taking place in Canada, which of course is one of our greatest trade partners. As the U.S. continues to fuel its nuclear reactors. And I think kind of taking a step back, the interesting piece about nuclear power within the United States, and we probably wouldn't talk so much about nuclear if it wasn't, proliferating kind of throughout the world. But you've got mostly reactors that are back from the 70s, 80s that haven't really been refreshed or updated, but are still in operation. I mean, that shows, at least in practice, the staying power of once you get one of these plants developed, it will last for a very long time. Now, the part of the problem in the United States is that it's become a regulatory issue. So to get permitting, to get a construction plan put in place, to get the local community of wherever you put this thing on board, I mean, you've got a lot of bad headline risk around nuclear in general. I think if anything, nuclear needs some kind of rebrand to make it sound a little bit cleaner, a little bit safer, because in reality, I mean, it's very, very low emission. It's very clean. It's very safe, especially with what we know about it today. But whenever you look back to, the 70s and before, and some of these rare instances, 3 Mile Island, Chernobyl, I mean, most recently, the, tsunami that caused the nuclear meltdown in Japan. These are things that create bad headline risk when people wouldn't really realize that you've got dozens of these plants throughout the country that are operating on a daily basis that have been since the 70s, 80s, that have caused no problems whatsoever. And it is a great source of clean power. But it does, to your point, require huge capital intensive process up front. And then now that we are getting some of this proliferation throughout the world of nuclear reactors being built, it creates stress on that supply chain. And so when you're getting down to the mining aspect of it, you're talking about, hey, where are we sourcing these materials from? Is there enough to be mined? Do we have the mines in place to kind of get this process in a place where you can actually support the end product being that nuclear power plant?
And one of the things that you mentioned that I think is really important is that it is a long production process to get uranium not only out of the ground, because mines take a lot of permitting, they take a lot of setup, finding the ore in the ground in the first place. And then once you get uranium out of the ground, it's still a years-long process to turn it into anything that you can put into a nuclear reactor and safely get power out of. And part of that too is that you have a lot of established mines in places like Kazakhstan. Kazakhstan produces over 40% of the world's uranium right now, most of which is owned and further refined in Russia, which opens you up to all of those geopolitical issues that you mentioned of, a lot of people have been boycotting voluntarily or straight up eliminating Russia as a trading partner, even for uranium. And that helped kind of drive what we saw over the past 12 months of the price of uranium kind of skyrocket, hit that, over $100 a pound. In addition to that, Kazakhstan not only having really close ties with Russia for all of this production, most of this production, it just instituted pretty drastic tax measures on the uranium coming out of the ground. Obviously, uranium mining is one of Kazakhstan's larger, economic benefits. And so they're moving their tax from 6% of the price of the uranium that's coming out of the ground to 18 or even over 20%, depending on the price of uranium. Given last year's prices, you would be looking at 20% tax on what's coming out of the ground for your largest uranium producers, which is, further hindering that supply. Obviously, Kazakhstan cost of production is a little bit lower than that of Canada. It's always been seen as kind of like the budget play, the cheap place to go get it. But now these new taxes bring it up to kind of what all of your bigger Canadian producers are seeing for Canada production prices. So, it's really interesting. A lot of things going on geopolitically here, where even if you want to buy out of Kazakhstan and you have those relationships and everything, a lot of times you can't, because it's going through Russia, being further refined in Russia, and further hindering that global supply.
Yeah, I think that's really interesting. And it creates a more unique supply chain for uranium specifically than your other, call it more legacy or more common energy, production, whether it's fossil fuels or wind or solar. A lot of that is produced, within the United States. Of course, on the fossil fuel side, we're pretty much sourcing that entirely from the United States, especially from natural gas. That's 100% US. A lot of the, electrical, renewable pieces, those do come from China. So you do involve a little bit of geopolitical risk there. And then, of course, uranium, the part that can be sourced from Canada, of course, that's a great trading partner of ours. But then whenever you look globally, places like Kazakhstan, you get into a little bit more precarious geopolitical environment, especially with that interaction from Russia.
And one more thing I think that's important to point out with that risk in Kazakhstan is that China is building about half of the reactors currently under construction. So they'll still have pretty tight trading alliances with Russia. So a lot of that uranium will find its way to market just in the same way that a lot of Russian crude has found its way into market, but at further elevated prices, because you're talking, confined markets, sellers that can't go wherever they want, or further steps like we saw with Russian crude going through India in order to make its way to Western trading partners, is that, it's further stops, more travel expense, more shipping expense. So, it'll find its way to market one way or another. That's just a thing with the global economy, but at higher prices.
Now that we've talked about the power generation piece, I think the next step is the transmission of that. So once you have power and baseload power and you've got this energy produced, you're going to have to get it to where it needs to go. And so a big part of that is the copper story. So copper, of course, makes up most of the wiring within the United States. It's throughout your home. It's on the cables that are run between, cities and along the highways. And that's the primary component and raw material that's needed in order to, transport this electricity from one place to another. And the issue is that copper prices have been somewhat depressed for, the last few years. I mean, like we said, historically, you've had this very gradual growth of electric output, of electric need. And so you've got a pretty stable ramp up as far as what's needed from a copper standpoint in order to transmit the electricity. And a huge driving force behind that historically was China, because China had the growing population, had the expanding middle class. And lately, the Chinese economy has kind of suffered the last 2 to 3 years, essentially since COVID. And so that's slowed down a lot, but you still have over 50% of copper smelting capacity is within China, for those reasons that I just explained. But the thing is, whenever it comes to mining, I mean, there's a serious geopolitical, conundrum when it comes to where we're sourcing these materials, because when we look forward for the need for power and that copper that's going to be needed to transmit it, you've got a serious mismatch between the supply from those copper miners and the demand that's going to be in place. And we're looking at what's going to be a really interesting dilemma as far as being able to produce enough copper to really supply what we're needed in the end with wiring and all the components that are involved in the electric grid.
Yeah, I feel like the copper mining conundrum kind of goes back a lot to, a lot of similarities to uranium. But with uranium, you have a lot of well-known, well-established mining fields or deposits. At least kind of where to go look in the first place. Copper is hard to find. It's spread all throughout the world, but like small deposits, just kind of random bits and places. So it can be like hard to find. And then once you find it, it's really hard to like negotiate with these small countries it's in a lot of times, because we're seeing a lot in the Southern Hemisphere, in Pacific Islands and South America. And so a lot of times you're dealing with, these governments, and it's a big portion of, it's a lot of money to small countries. We see that a lot in Southeast Asia, small countries, oh, they have a ton of copper. Okay, they're a big partner when it comes to developing a mine, which takes a very long time, especially with copper.
Yeah, I think that was one of the most interesting things I found from the research when I was looking at what goes into copper mining, copper production, and then the transmission of that is how long it takes to ramp up a copper mine. I was thinking maybe 3 to 5 years is probably common just because of the infrastructure layout and investment. But whenever you talk about, first of all, discovery, you have to find where the copper is located. And sometimes these aren't easy areas to access. If you're in the middle of the jungle with no infrastructure to get there, first of all, you have to decide whether it makes economic sense to go after that copper. Then second of all, if you're going to do that, you need to build the infrastructure, which includes roads in and out, means of transportation. You have to get the permitting from that country because, as we just talked about, that's another piece of it. Depending on where the copper source is located, that can be more or less difficult. And so that's a years long process. Then you're talking about getting the capital in order to fund the production of that copper mine. And then you have to do the initial mining that's going to be done just to get to that copper reserve. And then you're finally at operation. And that process can take up to 20 or more years. And so if we're looking at these huge growth, you started the episode telling us, how much we're going to grow and the grid demand over the next just 3 years, 3.5% on average over the next 3 or 4 years. And then you're talking about, by 2040, you're increasing, the need by 38%. I mean, that's really substantial. And so if you don't have these copper mines in place by that time, I mean, they need to have already started this process in order to make sure that this supply is online in time to actually transport this electricity that may be online whenever it's finally needed.
Kind of what you've touched on, but copper is used in every step of the way, in generation, in transmission, and in the end use good. And so especially when we're talking about homes or, residential projects, that takes a lot of copper. Electric cars are a huge driver of that as well. And, we're just seeing all of these demand drivers pop up. And, to that point is, if it takes 20 years to get a mine online and it hasn't been done yet, it hasn't been started, then we're behind the ball. And that's, it kind of leads us into, I guess, how are we looking at this? What, from an investment point of view, how do we take advantage and position ourselves to be in place to, be on the front end of this wave?
Yeah, of course, this is an investing podcast at the end of the day. And that's what you and I are looking at as far as how do we position portfolios in order to benefit from these trends. And so I think first and foremost, that's going to be your utilities if we're talking about the power generation piece, because that's a sure thing. We know that there's going to be a need for more power, and who's going to provide that? Those are the utilities. Now, whenever you get into that sector, you want to be looking for utility providers that are growing their infrastructure. So there are a lot of legacy utility providers that have stable infrastructure that maybe have, government contracted price increases over a period of time. That's great. They'll be around. There's going to be demand for those. But we also want to be looking at who's really growing their electric grid, who's developing, whether that is the fossil fuel piece or the renewables, or even something like a nuclear, if you're talking about the international stage. What are the companies that are working on those in order to build up that capacity? And then I know that, going off of that, as we follow our conversation, is the uranium piece is something that you've looked at a lot.
Yeah. And so you're looking at, with uranium, predominantly the miners. There are lots of small companies producing the actual power plants. And, one of the big players, Westinghouse, is half owned by one of the uranium miners. So you kind of get both in the same investment there. But it's a lot of small players with the actual production of the power plants. And given that we've lost a lot of the expertise required to produce these power plants, it's kind of a tough place to be right now. Whereas uranium mining, we know there's demand for it. There's, each new reactor requires, a certain amount every year, but they require about 3 times that amount of their annual usage of uranium. upon starting. You have to seed it with something. And so that's about three times, give or take, what their annual usage rate is. So as these 64 power plants come online, that's a lot of uranium just to get them started, let alone feed them every year going forward. So I think with uranium, we're currently looking at miners versus, anywhere else in the production line. I think one more thing to point out about the utilities that we're watching right now is that there's currently a lot of government money being pushed out to utilities for specifically green energy projects. And, given the current situation, given the election that's coming up in just really a couple months now, it's getting close, but the result of that may change the amount of government money that's out there to subsidize these projects, to entirely pay for them in a lot of cases. So a lot of times the utilities will get government money up front and then be able to recoup additional costs or all of the costs from their consumers. So it's really getting paid for by everybody but the utilities in a lot of cases. And that's something to watch going forwards if that continues, if there's still all of that money out there for them to grab.
Right. I think that's kind of an interesting piece of this conversation is the politics that are intertwined. Like we said, whether it's the uranium mining dealing with regulation there, whether it's the utilities and having the government, subsidize some of the grid build out there, or if it's copper miners, as far as the permitting process goes in these individual countries. And that last piece, it goes similarly to like the uranium piece where we're looking at the miners. Copper, we're also looking at miners as well. And to the whole point of it taking so long to ramp up production, we're not necessarily looking for your budding copper miner. We're looking for companies with resources in place, stable operations, of course, ones that know how to navigate the complexity of this geopolitical process when it comes to, procuring, exporting, delivering the copper. And then we are focusing more on the mining side, not so much the smelters, because to the point from earlier, you've had this huge expansion of smelter capacity, but it's really the miners that have the onus on them to get the supply online. And so I think that's pretty interesting.
Yeah, I think it's the established miners. And then again, paying attention to the geopolitics. Where are they located? Uranium right now looking out of Kazakhstan predominantly. Again, Russia connections, tax implications. And yeah, not in copper, same way, people who have good relationships with those governments, long-standing relationships are very important because we've seen some stresses in that market when somebody's like not really getting along with their local government. So really important things to watch. I think there's a lot of, good opportunity in the space. And any closing thoughts, Victor?
Yeah, I guess the last thing, I'll make one note on copper. I think it's really interesting that as we're thinking about these things, of course, uranium, we mentioned the substitutes being renewables, being fossil fuels. But one interesting thing about copper is it doesn't have very good substitutes. There are other good conductive metals, one being silver. But it's not going to be cost efficient to wire your house with silver. I think everybody can very easily understand that. One other alternative is potentially aluminum, but aluminum wiring gets extremely hot, causes fires. It turns to burn up more quickly. So that's also not the best option out there. So whenever we're thinking about the copper piece, there's no logical, at least metal substitute for it. So that's a market that's likely going to get tight without those substitutes.
Yeah, that's a really good point. So thanks, Victor.
Thanks.